We would definitely recommend you.
Sid is more than a realtor now, he's like a brother.
Everything is kept within the circle of trust.
I would really recommend Sid to everyone out there.
We spoke to approximately 15 realtors, and then we met Sid, and then once we met Sid and had that initial meeting, we knew that was a person that we wanted to work with.
Everything went very much as I expected from the beginning of being introduced to various houses and various properties that are available, to the point that we found what we really love.
Hey everyone, it's Sid Chandler from the Chandler Real Estate Group, and I'm going to cover the biggest question all home buyers and sellers are asking these days. Have the real estate prices in the Greater Toronto area reached an all-time high? Well, let's find out. In this video, I'm going to cover all the data from the beginning of this year for average prices, days on the market, inventory, active listings, new listings. We're going to cover gist of everything so you know exactly what the prices look like and where they're headed. For the sake of numbers and comparisons, I'm going to be talking just about the Toronto market, but it's safe to say that a lot of the surrounding areas are directly affected by the Toronto market. Let's get into it. So as you can see in this graph, I've outlined the average detached homes in the city of Toronto. As we look at the detached homes here, as you can see, the prices have declined since last week. As a matter of fact, this has been the lowest average price for detached homes for the entire year. The only time it had dropped to this price point, or at least close to it, was in the beginning of April, which tells us that we are reaching a rock bottom. Some may think that the prices are sky high, but in reality, when we look at these numbers, prices are actually slowing down, and it's a great time for people that are upsizing into a bigger home or someone that wants to downsize to enter the market, because you will see better prices in today's market. Comparing these prices with last year, we could see that the average homes were at an upswing towards this time of the year. Things have somewhat changed, and we can also, if we were to compare the two prices, you can see that the graph above, the yellow line, is actually somewhat more stable than last year's volatility. So that's a good indication that our market is healthy, but it is somewhat at a low price point right now. Good time for buyers. Moving on, if we look at the current number of sales in the city of Toronto, as we can see that the number of sales have also dropped towards the end of May, which is this time frame. It is sitting at 234 sales currently, compared to last week, which was 277 sales. If we compared the sales in March, when the prices had reached a sky high, when the lockdown was somewhat released, the sales had increased at 349 sales, which tells us that we had a peak point in March, but now the prices have somewhat declined, and so have the sales. Moving on, if we were to look at the bottom half of this graph, we can see the amount of homes that were selling at asking price or over. As you can see, towards the beginning of the year, most homes were selling over asking price. Matter of fact, 80%, 78%. On average, it's safe to say about 70% of homes were selling over asking price. However, if we were to look at last year's prices, actually, 43% of the inventory was selling at or over asking price. That is a big jump from last year to this year, because this year we're looking at 72% of homes selling over asking price. This tells us that the market is still hot. Average prices have dropped slightly. However, the sales are still moving. Moving on, if we look at the new listings versus the active listings, this gives us an idea of whether homes are selling quickly or they take some time to sell. And if we were to look at the current active and new listings, the new listings we can see are about 479 compared to last week, which is 502. That tells us that we're getting less new listings in the market versus active listings, which have increased. That means it's taking longer for homes to sell, which is why the active listings are higher in this week than they are last week. Matter of fact, they are pretty much the highest since February. That tells us that our market is somewhat at a low swing right now. Again, a good indication that buyers will see really good incentives in purchasing in this time of the market. So when we look at the months of inventory here, we can see that the average months of inventory at the moment is at the highest point since March. And that makes sense because the prices have dropped somewhat, and that tells us it's taking longer for homes to sell, which is why we're sitting at 1.2 months of inventory comparatively to last week, which was 1.13 months of inventory. A little bit of a jump. Will this continue to stay this way? Highly unlikely, because if we were to look at the average months of inventory back in April, we can see that it had declined to 1.636, but it quickly increased the following week to $1.729 million, which tells us that even though we're at a low point right now, we will likely go back up. Moving on, let's look at the average condo prices in the Toronto area. So when we look at this graph here, the average prices have been quite stable. Comparatively to early on in the year, prices have declined somewhat. We're sitting at $712,000 right now as the average condo prices, versus the month of April when the prices were somewhat at a higher level. However, if we compare these numbers with last year, we can see that the average prices were sitting at somewhere in the 600 range, but now they've increased to the 700 price point. So it's still an overall healthy market for investors or homeowners to enter the condo market. We're seeing that the average prices have declined at the moment. Normally, whatever is at a low point tends to go high. So if you are thinking of investing in a condo, it probably is a good time to enter now. Looking at the average sales, currently the average sales have dropped to 290. Comparatively to last week, it was at 387. So it's safe to say that the average sales and the sales prices have dropped. Moving on to the average months of inventory. So as we can see here, with the average prices being 712,000, months of inventory are sitting at 1.45. As I said earlier, the higher the months of inventory, the better it is for buyers to enter the market. When the months of inventory is low, it's more of a seller's market. So it was quite the seller's market early on in the year. Is it still a seller's market? Absolutely. When we compared the average prices for detached and condos early on in this video, we could see that the prices have gone up since last year, and they are at a pretty good price point. Normally, if the property is presented and marketed well, it does tend to sell at record prices anyway. For those of you that aren't aware of what the mortgage stress test was, it was an act by the government of Canada to qualify home buyers at a higher rate than they would be paying on their mortgage, just in case there was a rate hike and the buyers had to pay a higher monthly payment. This was put in place just to safeguard the home buyers from themselves, just so they can actually prepare for a worst case scenario. So before June 1st, the Bank of Canada was qualifying home buyers at a rate of 4.79%. This means even if you had a mortgage of 2% or 2.25, they would qualify you for 4.79% just in case the rates did rise. Now, moving forward since June 1st, the qualifying rate for the stress test has been raised to 5.25%, which means now the Bank of Canada will qualify you for 5.25% even though they're giving you a mortgage at a lower rate. Again, this is just to stabilize the market, but will it actually stabilize the market? I highly doubt it. It's just an act for Bank of Canada to control the prices from going extremely high. Who will this affect? Mostly people that aren't in the market, which means first-time home buyers. I feel bad for them because they've constantly been the one that were dinged by the stress test because they don't have enough of a down payment. They don't see any growth with appreciation, and they're the ones that are stuck renting due to these current rules. Will this affect the market? I highly doubt it, because the market is not tied to high qualifying rates and salaries. It's actually tied to low interest rates and equity distribution. What I mean by that is when parents buy homes back in the days and their equity grew, their home prices grew, they distributed that money into their kids bought condos, then they upsized into a freehold, and as the market keeps going up, their equity continues to get distributed into other investments and properties. So it's essentially the ones that aren't in the market that are getting affected, which is why I feel bad for the first-time buyers. Speaking of which, Justin Trudeau just announced that he will be doing something in the mortgage stress test or rules to help Canadians buy homes. I'm hoping if I were to give him advice, I would tell him to take away the stress test, because that's what really is killing our Canadians from buying their first home. Hope you found this video helpful, folks. As always, please like, comment, and subscribe to these videos, as I will be rolling out a new video at least every 2 weeks to keep you up to date about the market and help you with helpful tips, tricks to buy, sell, and invest in real estate. Cheers.